All right, first met young adults. It is time for us to have one of those chats. We haven't done one of these in a while, so I'm very excited. You guys know I hear different things and I get these thoughts going, and we see the direction of how things are flowing. And one of the things that we are sure of is that we need to be armed and equipped, and that means we need to be informed. So where do you go? You go to Wise Counsel. And so, of course, when I have a question, and I'm hoping when you have a question, yeah, you do your research. That's what you're supposed to do. Yes, you read your Bible. Yes, that's what you're supposed to do. You bring that wisdom, you take that wisdom, you apply it to your life. But if you don't talk to the experts, you're going to be missing out on some things. And so what I have done, I said, hey, look, let me go ahead and reach out to some experts. And First Metropolitan Church has a relationship with the Thrivent Financial Group, and they have a group of experts working on their team that come in specifically and work with people of all different backgrounds to make sure that they are informed with the information that they need to be excellent stewards. And that's what we want you to become. And so we have three of those individuals with us today, and they are amazing in all of what they have taught us thus far in our Bible study that we had at the church, and also in previous meetings just like this. And so you should be excited about today. If you have any questions, I'm running really fast because I know it's lunchtime. But if you have any questions, listen in the chat group. I'll be live in the chat group because I'm really just hosting because I'm not an expert, but I'm going to be in the chat group with you. Let's give them some questions so that you can be informed and empowered to make some good, sound financial decisions. So leading us off is that young lady, Sister Jana Hurd, and she is gonna tell us some things about herself, introduce yourself and let's get rocking and rolling.
All right, awesome. Hello, everyone. I hope everybody's having a happy Thursday. Can everyone hear me okay?
I'm good. I'm good.
All right. All right. So today we have, of course, our team members, Miko and John, on the line as well. And we're going to spend some time today talking about life insurance and the types of life insurance and how important it is to us, just everybody really, and what it means to set this type of coverage and policies up for your family. So my name is Jana Hurd. I am a financial professional with Thrivent, and then I'm going to give the floor over to John and Miko to introduce themselves.
Well, happy Thursday, people. One more day and we can call it a weekend. I'm, it's kind of a blessing right now. It's around 110 degrees outside. So
Yep.
Let's see how long that lasts. I said this was supposed to be a cold front, and I think it was just a cooler front. So, but if you didn't know, it's snowing in Colorado. So my name is Jonathan Bourne. I am a financial consultant with Thrivent. I've been in this industry and with this company for the last 20 years. And our purpose today is just to bring you some information, give you some high level 10,000 foot view stuff of what life insurance can do, how it can be a part of your portfolio, how can it be a good protection piece for you. And then we're going to do some basic terminology information on what are the types. And we'll even go through maybe some a little bit more specifics on how you apply, what are some options that would be available to you. And of course, you always practice your due diligence. We're going to give you the best information we can. That way you can walk away with some good stuff.
Great.
Well, hi, everyone. Good afternoon. It's lunchtime. So my name is Miko Thomas Tisdale. I am the engagement leader in the Texas region. My role on the team is to learn what you're passionate about. So as you're having those conversations with Jana and John, make sure that you include those things that motivate you, that get you up in the morning, or just causes and local things in the community that you're passionate about, because we're not just about, making sure that your financial journey is stable. We want to make sure that we're supporting and advocating those things that you care about. It is a holistic way of planning. So I'm that person that it may mean education, it may mean projects in the community, it may mean volunteering. We want to be an organization that advocate for those things that you care about.
Awesome. So John, do you want to just spend maybe a minute or two just talking about what we do as financial professionals, and then I'll jump into insurance?
Yeah, I think that'd be a great idea to go ahead and talk about your specific expertise. And then let's jump into this insurance, because that's why I had a lot of questions, and I'm glad you were willing to help me as my kids drop cups in the background. Thank you.
So I got you. So I'm going to talk a little about what we do as financial professionals. I'm going to talk a little bit through a process of how we come up with our recommendations. And I'm going to turn the floor over to Jenna, and she's going to talk about specific types of life insurance. So what we do as financial professionals is, in a nutshell, this. We become your personal consultant, and a lot of times we are accountability partners. So what we do as financial professionals is we sit down with each individual client or as a family, trying to discuss what their big aspirations are, what their goals are, but more importantly, what their needs are. Because we don't make sure we're going to fill those gaps and get those needs taken care of. And that process it's very linear in thought. So you gather a lot of information, you figure out what is most important, and then you start itemizing them out. I want to tackle number 1 first, number 5 second, and number 10 last. And everything else in between, we just may get to at a later date. But what it does do is supplies you a footprint or a roadmap on how you need to get your assets, insurance, the things that are most important to you organized. So what it really will do is it keeps you on track of, this is what I need to do next. So that's really the process we take you through. And then over the course of a relationship that Jan and I have with our clients, we touch base every 6 months, maybe every year. Hey, have you taken care of X, whatever X may be? And that may be your legal documents, making sure you met with an attorney and get your wills in place. Or maybe it's like, have you considered doing a refinance on your house? We talked about that 2 or 3 months ago. Did you act on that? Did you, how's the college funding going? Things like that. We just check in with you and say, hey, have you done this yet? And it's not to harass you, because we're doing it out of love. So what we're really trying to do is making sure that you're staying on track with all of your needs. So when we go through that process with individuals, it's always up to the individual to make and take action. It's our job to give those recommendations and stay with you through that relationship.
Awesome. Thanks, John. All right. So I am going to jump into life insurance. So what is life insurance? And I'm going to go through some benefits and things like that. But first, I want to just talk about the 3 key types of life insurance. So there are lots of different types of life insurance policies, lots of different life insurance companies. But what we want to understand today is just the 3 basic types. And there's a couple of things that I do want you guys to walk away with. Just key things, so that whenever you are in the position to where you want to get life insurance for your family or look into more life insurance options, you have a basic idea of what's going on. So basically, the 3 types of life insurance policies that you see would be a term life option, which I like to call the rent option. So the term life is exactly as it sounds. It's temporary. It's for a period of time. It will expire. So just like a rent, when you're living in an apartment or you're living in a home that you're renting, you have it for a particular amount of time, 5 years, 10 years, a year, whatever it may be. But at the end of that time, you would either have to extend your lease at that time or buy a home or something like that. So that's the first kind. That is the term life option. Typically, that's the cheapest one that you can get. And so we could talk a little bit more about that. But that's the one key thing I want you guys to know about the term life. Term life means that it will expire at some point. Just like rent, you would have to renew or get additional coverage, et cetera, et cetera. All right, the next type is your whole life. This is a permanent life insurance option. I like to think about this one as a mortgage. So just like when you're purchasing a home, if you have a mortgage and you're purchasing your home, at some point you're going to pay it off. It will be building a cash value as you go. So whole life options are the more expensive options, but it's because it's kind of like buying the home, the mortgage option, and you're going to own that benefit at some point in the future if you continue to pay your premiums. So just by the way that it sounds, you probably figured out that that is a more expensive option of getting coverage for life insurance. And then the third option is what we call universal life. And the universal life options is also a permanent life option, but it has a little bit of flexibility. So you can, well, it has a lot of flexibility. So you can have a different premium amount. You can change your actual face amount of your policy. So with the universal life, even though it's permanent, you see some of the I guess, flexibility that you may want to have. And then you have the permanent life insurance too. So for a lot of folks, universal life is a good option because it's right in the middle and it gives you sometimes a lower cost and then some of the provisions of the permanent and some of the term at the same time. So universal life can be good for a lot of folks too, just depending on what your life insurance needs are. I want to back up real quick too. And I want to talk about just really quickly, I talked about the 3 types of life insurance, but I really didn't say what life insurance is. So I want to just say really quickly for folks who are not familiar with life insurance, basically life insurance allows people to put in some type of risk adversity. So something to secure your income. So if something were to happen to you, the reason why you would purchase life insurance is so that if something were to happen to me, I'm paying in a policy, let's say it's $100,000 worth of coverage, that money would go to my family, friends, whoever I want it to go to if something were to happen to me at death or whatever, so that you can have income replacement, basically, for your family. So if something were to happen and I'm paying for a $100,000 life insurance policy, the beneficiary is my husband or my children. Something happens to me, they get the money, they get to continue with the quality of life that I would want them to have. So I want to just make sure I say that just in case people have general questions about what is life insurance in general. And then some of the key things that I want to make sure that folks kind of keep in their heads about life insurance. So I know there's been a lot of, I guess, miscommunication or thoughts around life insurance that people aren't exactly sure, okay, why would I need that? Why would I spend, 20, 30, 10, whatever it is, dollars a month to pay for that? What's the point? Well, there's lots of different points. And the one I just mentioned was income replacement. But another couple of ways to think about it is life insurance is a way of building wealth for your family, generational wealth. So if something were to happen to you and, you needed, money to pay for a funeral, the money from your life insurance policy would help your family to cover that and could possibly leave you some change to do some other things with your life as well. So life insurance is not only income replacement for the family, but it's also a way to provide for the family and building wealth in future generations. Another key piece of life insurance is if you have purchased things like a home, a boat, a car, things like that cost a little bit of money that you think, okay, well, I'm going to have, 30 years to pay that off or 15 years to pay that off. And while you're going through that 30 years or 50 years, something happens to you, then your family then will be able to pay off whatever that is, that home or whatever it may be that you were planning to get, or acquire for your family. So it gives you also kind of a backup plan on paying for different things. And depending on the type of life insurance you decide to get. So you say, you know what, I really want to have life insurance, but I want to also save some money, build some cash value. You can also create a life insurance policy or plan for yourself that would include, some cash value. So you can have cash value in the future versus just having that kind of end of life or final benefit amounts. So life insurance, it seems sometimes like, oh, maybe I don't need that, but it is really the difference between really protecting your income or just being stuck, really, or your family being stuck if something were to happen. And something is going to happen. None of us are going to be here forever. And we know that we want to create an environment for our children, for our family, where they are not missing us and missing everything else, but they have a little bit to pay for whatever it is that they need, and they will miss us, but they won't miss out on their life just because we're not around anymore.
Jana, let me ask you a question. And I know this is kind of a silly question, but one of the things we talked about is it's better to get them when you are younger because of the amount of the policy.
Yep.
But what if you're not married and don't have children? Can you get a policy and then designate a beneficiary later?
Yes. So you can get your life insurance policy, and actually during those quarterly or annual meetings that John talked about, we always go over beneficiary information, because you, as the owner of the policy, you can change that, whenever you get ready. So say, for example, you say, okay, you know what? I want the Benny to be now my spouse now that I'm married. We can do that. Those are the types of things that we do in the reviews, and making sure that the money is going to the person that you would want it to go to at different points in your life.
So what you're also saying is that as a spouse, this policy is also good leverage. Like if your wife is not doing some of the things that you wanted her to do when you married, and then you can use that as leverage to get her to do those things. Is that what you're saying?
I wouldn't put it like that, but I guess
not exactly like that.
I wouldn't put it exactly. At least I wouldn't tell her that. If I did feel like that, I wouldn't say that to her. Yeah.
Okay.
Yeah.
I think in that case, Pastor, the divorce statistics would go up.
It's not good leverage.
No, I wouldn't go there. Yep. So, so John, is there anything else?
Yeah, one of the things I wanted to add to that, and I think these are some key points, just in addition. Life insurance proceeds are not for you. They're for the people that are left behind. It is a gift, okay? But that gift comes with no tax burden to whomever is going to receive it. Life insurance is the only asset that's going to pass tax-free. Everything else that you're going to do, there's going to be some tax consequences for the most part. Life insurance is not going to have any taxes due. And more importantly, it's pennies on the dollar. For the amount of money that you're going to place into a contract and what's going to be paid out to the people that you leave behind, you'd never be able to make that money up in the market. I've been doing active investing for the last 20 some odd years, and believe me, you're never going to make that up. And I want to give you one example. My best friend's wife died almost 3 years ago now. I had done a plan with them right before she was diagnosed with breast cancer. We were able to place contracts on her and him, not even knowing that she was sick. Diagnosis comes out 1 year, and she fought a good fight for almost 8 years, and then she passed. But what that life insurance did is it allowed Thomas to pay off his house, to fully fund his kids' education, to not miss a beat and take as much time as he needed off from work to gather and get his act together. And what it's done now is it allows him to scale back what he used to do, where it was a lot of travel. He would go in quite a bit. He's not working nearly as hard because he doesn't have to. The money is there to give him what he misses from his wife, and that was the loss of income. That income replacement sustained his livelihood. And I'm thankful every day that, one, we did that, two, that they listened, but number three, I had the intestinal fortitude to make these large recommendations that most people would have balked and said, well, I have one child and I have a mortgage. What do I need $1.5 million worth of life insurance for? Well, that's why. And one of the best things that I could have ever asked for is that in her last Facebook post that she posted before she died, she was nice enough to mention to me and say, hey, this conversation about money is going to come up. Thomas is fine. Our friend John took care of us. And that's our commitment as financial professionals, is make those recommendations so that God forbid something does happen to you or your spouse, we're not delivering a check that isn't going to cover anything. We want to make sure it keeps you living the way you need to live, because you're going to have enough stuff going on when you lose the person you love the most.
Absolutely. That's great. And we did have a question in the chat. It says, what is cash value? Do you want to take that one, John?
So the two policies that Jana was mentioning, the permanent contracts, traditional whole life and universal life, those are also act as what I would call a forced savings. So you're paying a premium, which covers the cost of insurance, but that premium also starts to accumulate some value. And so over time, that value, or what we call cash value, can get quite large. So I use an example. Let's say I have a $100,000 face amount, and my suggested premium is $100 a month. That $100 covers the cost of insurance, and then it's actually invested inside the account or inside the general fund with whatever company you're using, and it's earning an interest rate. And right now that interest rate's earning 4.5%. Two things come into play. One, it's a compounding rate of return, not a simple rate of return like you'd see on a CD. And number two, it continues to compound every time you make a deposit. And what that cash value does is this. At a given time, you can say, well, I want to borrow against it. You can borrow against your life insurance cash value contract. Pay it back, but now you have access to funds that maybe you didn't have before. Number two, you can take a withdrawal against it. And what that withdrawal does is you take out your cost basis first, which means you pay no tax. You take that money out, you purchase the things that you need to purchase or do the things that you need to do, but you still maintain coverage. The most important things with cash value life insurance, and always remember this, it's a savings vehicle, it is a protection vehicle. And that forced savings element should be a part of everyone's portfolio. So when we do these holistic plans, we talk through these types of conversations and say, hey, we know we have this need and the need is large. Maybe we cover a big portion of it with a least expensive option, which would be a term. But then we have this additional piece that will be there as long as you are, because it's designed to last until we all die. But at the same time, it's earning something. It gives you a little bit more leverage. I use them as a person's bond portfolio because a 4.5% rate of return compounding is on a taxable rate, probably close to 7 and some change in a bond portfolio. There's not a whole lot of bond portfolios going to consistently hit that number with no risk.
Let me ask this question. One of the things that is a buzzword right now is pre-existing conditions. Of course, a lot of us have pre-existing conditions, even at a young age. Some of our clientele, if you will, are going to have those things. And one of the most challenging pre-existing conditions that I find when I'm in conversation with people about insurance is poverty. So that's one side of the conversation. But let's talk about how you can be creative if you have some type of pre-existing condition that does not allow you to get insurance. And if that is the case, then how do you handle it from a standpoint of, hey, I just can't afford the policy. My health is good, but I can't afford it. So let's talk about some creative ways.
So I'll address, would you like to take one, Jenna, or do you want me to talk about it?
You can go ahead and then I can just add in if there's anything else I want to add. Okay.
So I'll start with health pre-existing condition, okay? We're not underwriters, right? But there are 15 different classes, rate classes that you get inside life insurance. What we call preferred best, which means you're in perfect shape. Super preferred, which means you're almost in perfect shape. Preferred standard, standard is the average. You know, you're just kind of meeting the average. And then you have what's called substandard, which means they're going to charge you a little bit more because you may be diabetic, you may have high blood pressure, you may have high cholesterol, on and on and on. And a combination of all those things will get you a substandard rating. And when you go through that rating process, or when you go through the underwriting process, they determine what the rating is going to be. When we give quotes and give ideas of how much things cost, we'll quote it as what's called standard, the average. And we always kind of say the same thing. This may be less expensive than what we're showing you now because you might be better than an average. Or it may be more expensive than what we're showing you now because it may be less than average, okay? Now on the poverty side, I would probably put it to you this way. You may not be able to afford it. You may not think you're able to afford it. But what we do through this process is we find different ways to say, hey, if we cut this out, whatever this is, if you can sacrifice this, take your pick what you want to call it, that pays that premium. Because if you have people that would be left behind, you can't afford not to do it. Because now you have just continued to matriculate a cycle of poverty. Because if you have them, if you're already struggling and you've got a wife and a couple of kids, they're going to struggle for the rest of their lives because we didn't, one, make a recommendation. Number two, we didn't find a way to create that money for you by helping you with some budget issues. And number three, God forbid something happened to you, they're never going to come out. And that's how we work with that. So from our standpoint, we want to make sure that we're giving you good ideas on how to be good stewards with what you're receiving, so you are protecting that family and those loved ones.
Yeah, I think that's great. And the only other thing I would add to that is, so you may have to start out at a lower amount. So you may say, you know what, right now I can only do, $50,000 or $100,000 worth of term life, which is the cheaper option. But as time goes, you can add more insurance and you can do other things to increase your portfolio. One of the things that when we meet with people who may not have a whole lot of money up front is just opening their eyes to say, I don't have to do everything at one time. If this year I pick up one insurance policy for, $100,000 or whatever that number is that I can afford for myself, and then in a few months I pick up one for my wife, it doesn't have to be all at one time. I'm going to do all this stuff that I can't afford to do. Let's sit down and think about, okay, what can I afford to do today? 100,000 today. Maybe I can afford 200,000 next year once I get this promotion, or I pay off a few credit cards, wherever that may be. But I would say with the whole, I can't afford it thing, you probably can if you move some things around, and you don't have to get as much as you may need at this time. You can start somewhere and build on that insurance as you go. And then as far as, health conditions, I know, as John was mentioning, it just depends on where you are with your, personal health and what the underwriters are going to require. But I would always tell people, at least try. Don't just assume that you cannot, because it doesn't cost you anything to try to get some coverage. And if you do not have coverage, as John mentioned, you are not going to put your family in the position that they need to be in, and they're going to struggle. Not only are they going to miss you, they're going to miss out on a whole lot of life because they can't afford it. And so that's something you don't want your family to have to go through. I've been through that personally. It's no fun trying to figure out how to pay for funeral expenses, how to, just pay for whatever you need to pay for in that time period, because the main income, earner has been lost, whatever situation may be. So it is important to just plan it out and get started. I don't care if it's $1 a month, whatever you can afford. We can figure out a way to get you going with something, even if it's just planning for a future date of getting insurance or something like that. But always still submit your application and try, and then consider adding insurance as you go. As your income builds, you add.
Yeah, I wrote down when John was talking, as believers, we know that there is life after death, but the insurance helps us to make sure that our families continue to have life after our death. And that's something that we want to keep in mind. But I do want to also ask a question about community. What are some things that we can do, Sister Miko, that could make the community a lot more aware of how important the need for health insurance is? Because this is a major thing that affects the whole quality of the community, and also as churches, it affects our churches as well.
Absolutely. So I will also add to what Jan and John mentioned about the number of calls or the number of emails that I receive when people are trying to raise money to bury their families, and the peace of mind that you can have in being able to bury your family, where you're not asking brothers and sisters and friends and other family members to give so many dollars so that you can just bury your loved one. So that is the value of having life insurance, regardless of where you are on that journey, surviving, struggling, stable, secure, or surplus. It's very valuable to you to have that tool in your toolbox just to be prepared, because we don't know when that time is coming. But we want to do the best we can, or we as a team want to help you get to the position where you can be better prepared. And so other ways that we address that is through education, because sometimes people just don't know, right? They don't know what's out there. They don't understand. So maybe it's education. Maybe it's helping you understand that money journey or that financial journey. Maybe it's helping you understand the products, as we're talking about life insurance today. It's just getting that down to the ends of, what does it mean? How can I obtain this? And then what does it mean for my life and my family? So it could be education. Another thing is, because we work with so many organizations and congregations, there are just ways to connect, right? But I am a firm believer that education is key, is teaching the community why this is so important, and then also providing those tools and resources that they can make those decisions.
If you guys could, we always talk about that old slogan that's been out there for a while, is health is wealth. Health is the new wealth. That health is the new wealth. So yes, we do have to take better care of our health. But we also know that the insurance is security, is an expense, but it's also protective. And I don't think, sometimes we may look at what we have, and we may not have a good understanding of just how much wealth we have until we actually take out pen and paper and be like, wait a minute, I do have some things that need to be covered. Is there a form or a formula that you guys use to help people determine their net worth? And then also, is there a threshold of how much you say to cover, and how do you go about that?
So yeah, that's a great question. We actually do have a document that we fill out with the clients and or give it to them in advance, and it forces them to kind of itemize what you just described. I have this house, I have this vehicle, I have this much in savings, and on and on and on. So it really just lists out everything that is on their portfolio, their net worth. And then what we do after that is we then determine, okay, this is what your worth is. These are the liabilities that are attached to that worth. Do we want to just cover those liabilities? And then we come up with that solution. So if that liability is $100,000, we want to cover that liability. If there's a little bit more to it, which is the more comprehensive side of it, we go through that process. But yes, to answer your question, we do walk through that process, determine what the liability is, plop, there's the liability. And here's the more important part. Some of those liabilities might not be there forever. You may have a 15-year mortgage on your house, and we are going to cover it just for that period of time.
Yep.
Because you just reduced that liability. You may have several things that may be for a 5 or a 10-year period of time. We might just be covering it for that liability. So there's no one size fits all in anything when it comes to financial planning. There's always going to be a piece that looks like a puzzle, literally. And as we put all the pieces out, that puzzle starts to connect. You see the picture, and then you move.
Yep. Awesome. One of the things, Johnny, that you asked about was other products. So for folks who never get approved for life insurance, or, they never feel like can you guys hear me? Yeah. So you just never get
creativity. I said the creative aspect. Yeah.
So there are other products, like you can you just to get some investments and savings. There are different types of investments and saving products that you can get. I would say in addition, but if you can't get approved for life insurance at any level, I would say there are like annuity products and different investments like mutual funds and different things that you can do to help grow your money and help you kind of build your money up. Choices that are better than just a savings account where you're limited in the amount of return that you're going to receive. So there's different mutual funds that you can get involved in, and even annuity products that would pay you a set amount monthly, and they don't require any kind of underwriting or anything based on your health or anything like that. They're just different types of savings vehicles that you can use versus just your traditional savings account that might build a little bit more income for your family. And just like the life insurance products, you can leave those products, your family members, as beneficiaries on those products, and they would receive those products if something happened to you, and then they could use that to take care of any final expenses and things like that for you too. So that is a way you can get around life insurance. It's definitely not the return that life insurance is. So I'll just give you an example. So today I was running some life insurance contracts, $500,000 contracts, and the couple were in their early 40s. So in your early 40s, you can run a $500,000 contract and pay, $50, $60 a month. There's not probably an investment that will do that for you and give you that type of return. But if you don't have an option for insurance, then you can do some savings vehicles to help you save more aggressively, so that you can get a little bit more put back for your family if life insurance is not an option. But definitely life insurance, if you want to build wealth for a low amount of money a month or annually, however you want to pay it, life insurance is your best bet to do it. But if you can't get approved for that, then there are other savings vehicles that you can use to just accumulate wealth a little bit better.
Yeah, when we first came across this conversation, so that you guys can kind of get a backdrop, my mother-in-law, we were having a conversation about something that transpired a few years ago, and she had she had a mortgage insurance on the home that she purchased, and so when she purchased that home, that insurance insured us that if something happened to her, that we weren't going to have to worry about that. But when she refinanced, she lost the mortgage insurance. So the first thing I looked at is I'm like, okay, well, we have enough to take care of Houston. But after that, we got to get in trouble. So that's a situation where you can inherit something.
Yep.
You don't have enough to take care of what you inherit. So then you had to get creative. You had to say, wait a minute, well, if we can't put a policy on someone that is 92,
right,
what do? We had to be very creative in this end of the game to actually be able to absorb that type of a blessing and to maintain and also hopefully build on top of what was left. And that's how we came across that. And so Anna said, well, maybe you could consider an annuity route that would not give you full payment for a home, but maybe save up enough to where it can on the back end. There you go, help you maintain.
Help you pay for it. Yeah, help you maintain it.
So are there some other thoughts like that? Because that creativity, I was like, man, you blew my mind. I was like, okay, all right, that is a good thought.
I would say just any of the savings vehicles, like the different mutual fund products that we have. So basically that gives you an opportunity to invest at a level that you're comfortable. So if you decided to go that route, we would do what we call an asset match or kind of judge your risk tolerance and then invest accordingly. Of course, with that, the issue with any of those types of investment products is there is a risk because you're investing, with those products. Whereas, as we were talking about with life insurance, that's guaranteed. So that would be the thing. But yeah, you definitely can do, different savings accumulation vehicles. John, do you have any other thoughts around that? I know we have like the annuities and mutual funds. Any other thoughts around different types of savings vehicles that folks could use?
I think that's good, but I want to add just one thing for you, Pastor, is let's talk just one level up. And that level up would be I want to be able to give a gift, whether that's to an individual or my church or my favorite charity. The best way to give that gift with the biggest bang for your buck, literally, is through a life insurance contract. So, one of the things that, a lot of people say is well, I don't feel like I can give all that much, but I want to give something, but how can I make the biggest impact, right? And I've done this several times in the past where we've met with different parishioners. We've said, why don't you take out a life insurance contract that the church is the beneficiary? Or one step further, church is the owner. You're paying the premium, because that's part of your tithe. And then at some date in the future, because we're not going to live forever, church is going to benefit greatly from what you have been able to do. That's the easiest way and the most efficient way to give the most amount of money to something you care about. It doesn't always have to be an individual. It can be an organization. You know, it could be your church. And what we've noticed over the years is that people I do believe that everybody has a giving heart. And sometimes when you watch the news, you really kind of get distracted. You think that can't be true. But I really believe that everybody has a giving heart. And one of the things that we do as part of our process is teach them to be good givers. You know, if there's something that we can do to maybe give them that one added step, because in that process that we walk through, we talk about these basic ideas: savings, protection, retirement. Then we go one step further: charitable giving, how we protect others, how we can make a bigger impact in our community. And when you brought that up a few minutes ago, is how can we affect the community? We affect the community like that. I mean, just think of what amazing things you can do if you have the resources to fund these projects, whatever they may be, right? That's where the value really starts to kick in. Yep. So I kind of want to throw that in there because, you know, it's not all here at this level. It really goes up to here.
Well, let me ask something. I would ask this question. You talk about different products, Jenna. How important is the company itself? And I'm saying that because I get scam phone calls all the time with the deal of a lifetime, $1 million worth of insurance for $10 a month. It's like, oh my God, I got this money to this guy. How do you vet these companies? And also, there are some new startup companies that are legit, but are just not at the level as the big boys. Would you take a risk and go with one of those companies if you didn't have the kind of money to jump in with the big boys?
So for me, I would be looking for a company that has been in the industry for a while, because you got to remember that you're going to be paying this out, or you might live 20, 30 years before your life insurance actually has to be paid out. So for me personally, a company like Thrivent, who's been around for over 100 years, pays their policies out, has not had a concern with that ever. I would feel comfortable putting my money there, because then I know for sure that my, kids, family, it's taken care of. Not to say that those other newer companies won't be as reliable, but we just don't know. So for me, I put my money with Thrivent. I have all my policies and stuff with Thrivent because they've been around, and I know we pay our policies because I'm the one who does the claims and I've seen it in action. So, I mean, I would definitely want to do my research on, I have had a couple of unfortunate experiences that I found out about working with clients where they did have, and I'm not going to say any names, but they did have different company or a company that we heard of twice, where they did not pay the death claim out. And so can you imagine that you're paying, whatever amount it is, and then when you terminate, then your family doesn't get the money? So we, when I was working with another one of our associates, we did hit a person who had gone through that. So she was kind of skeptical. But when she found out that, Thrivent is very strong financially, Thrivent has been around over 100 years and always pays their claims, she was like, okay, sign me up. So it is very important that we do our homework and make sure that the companies that we're getting involved with are reputable companies. So I would definitely do my homework, and for me personally, go with somebody who has shown to be, respecting their policies.
I think that's a very important, and that's why I want to ask that question before we get off, because man, I mean, I get emails, text messages, phone calls from everybody and their grandma. And when you're in a situation where you're desperate and you want to do something, these guys will eat off of you $10 at a time, and then get you to the point where you're paying $40 or $50 at a time, and then when you need it.
Unfortunately,
any last parting shout outs from you guys, and then we'll get off?
For me, I would just say, if anybody has any questions about life insurance, you are welcome to call John or I to find out more about it. And then if you haven't talked about life insurance with your family, I would say to talk to your family, figure out what you guys have or what you don't have, and get that written down somewhere, figure it out somewhere, so that when something does happen, and it will, your family is ready. And it's not another like sad situation and you know, going out and trying to pull money from different people like Miko was mentioning. We have to get over that. We've got to get past that. And the cost of insurance is not, you know, so high that, you know, it's out of control. I mean, if you just skip a couple of, you know, times to the fast food restaurant, you'll probably have enough to do some minimum coverage. So talk to your family about what kind of coverage you have and what kind of different products you've purchased. And then if you don't feel like you have enough, or if you don't feel like, or if you feel like you just want to talk about it and figure out where you need to be, you can set up a consult with us. There's no charge to that consult, and we'll be more than happy to just talk to you about what are some good next steps for you and your family to get you into a better position financially.
And then I would just add that, you know, we're going to meet you where you are, wherever that is. We're going to meet you where you are. And it's never too late to have the conversation. Mm-hmm. Never too. The only time it's too late is when you're gone. You can't have that conversation anymore. So we don't want that to happen. So the time is now, is have that conversation with Jen and John. And as I said before, make sure that part of that conversation is those things that motivate you and that you're passionate about, because we care about that as well.
I think the only thing I would add to that is don't be afraid to ask for help. You know, a lot of people want to do things by themselves, maybe because it's, you got a trust issue. You knew people in the past that were taken advantage of. As Pastor was saying, I don't want to get scammed. You know, reach out to a professional, whether it's us or somebody else. Reach out to a professional, ask these questions. Therefore, you can make the most informed decision. Because we've said this. Did anybody remember Schoolhouse Rock? You know, when they were kids on Saturday morning, knowledge is power. Knowledge is power.
Yeah.
Learn from it. Pick their brains. Figure out what you need to do so you can make the most informed decision, which will be the most important decision for your family.
Yep. Awesome.
Well, I thank you guys for joining us for this discussion. It has been awesome. I've learned a lot myself, and we're going to, of course, the stream will still be there for those of you who will be watching later. Please leave your comments. We'll come back and comment. At these professionals, we'll list their information in the chat so that you can have direct contact to them as well, because this is just an hour-long discussion. Imagine if you were able to go in a couple of weeks and actually sit down and talk and meet via Zoom or face-to-face and really list everything down, which you can actually cover. Sometimes, guys, it's just being creative. And then other times it's just that creativity is also a part of a strategy. There's a way that you can do things without having a GoFundMe account. You know, if you're looking at a GoFundMe as a bank account, then you're probably in some serious trouble.
Yes. Yes.
You can fund this, people, I'm telling you.
Yes.
But it's going to take some discipline and some diligence on our part, and the humility in swallowing our pride and being able to go down and sit with a professional and ask them the questions that we need to make sure that our families are secure and can prosper after we are no longer here. So we thank you guys for joining us. Of course, this will be in the dialogue. So if you have a question, please, again, list that and we'll see you the next time we do something like this. And if you have a topic that you would like to have addressed, just like I had a question and then we come up with a topic, please list that, because we want to do these more often because as like Don reminded us, knowledge is definitely power. Hey, God bless you, and thank you guys for joining us on the chat.
All right. Thank you for having us.